Hello, Committee Chair Zaragoza and Committee Member Basua. This is Kevin Riper, the CFO, presenting on the fiscal year 2021 budget mid-year review. The recommendation is that the Finance and Governance Committee receive an update on the latest fiscal year 2021 revenue and expenditure projections for major funds and authorize staff to make the presentation to City Council. We also recommend that City Council approve a budget appropriation request in the amount of $16,066,093 across 37 different funds. That Council approve amendments to the position control resolution, the Council approve amendments to the classification and salary resolution, and that Council authorize changes to the list of equipment financed by the existing Bank of America line of credit. I'm going to go through the 5 major funds pro formas: the General Fund, the Measure O Fund, and the Water, Wastewater, and Environmental Resources Funds as they stand at mid-year. For the General Fund, the year began at an available fund balance of $12.8 million. We expect a significant chunk, $10.75 million of new Measure E 1.5 cent sales tax or transactions and use tax, which begins to be collected on April 1st of 2021. So there's an infusion of $10.8 million to the general fund just from the Measure E sales tax. In addition, the base Bradley Burns 1% sales tax is expected to be about 11% higher than was assumed in the adopted budget last spring, because visitors and residents of Oxnard have been spending less money in total, but not as much less on taxable goods as on non-taxable services. So back in the spring, when we were in the depths of the recession, we feared that sales tax revenue would collapse, and it didn't. It's definitely been impacted by the recession, but in Oxnard, in Ventura County, and statewide, sales tax revenue did not go down by as much as we had feared. Another big change upward in the revenue estimates for the general fund is in intergovernmental revenue. There is an extra $4 million for the current fiscal year, all coming from the Federal CARES Act. $2.5 million coming from the Federal CARES Act via the state, and $1.4 million of Federal CARES Act money coming via the County of Ventura. There's a minus in the forecast. Transient occupancy tax is going to be, we believe, even lower this fiscal year than we thought last spring because of the continued almost freeze, slowdown doesn't seem like the right word, in business and leisure travel. And therefore, hotel occupancy and rates are way down, and so are projected tax collections for TOT. Nonetheless, there's almost $17 million more of general fund revenue than was anticipated in the budget last spring. And like I say, most of that is due to the CARES Act and the Measure E sales tax. One might ask, well, why didn't you put your Measure E sales tax revenue estimate into the forecast for the budget for the current fiscal year? And the answer is that City Council hadn't even considered putting on the ballot the Measure E until July 7th, which was after budget adoption. So obviously we weren't going to include in the budget something that Council hadn't even considered, let alone the voters voted on. But the bottom line for the general fund revenue picture is very positive, up by 1/8. On the general fund expenditure side, there are several noteworthy changes. Working our way down the table, Cultural and Community Services is expected to spend about $800,000 less than its adopted budget amount, and that's because of the COVID-19 induced suspension of lots of recreation programs. This was matched on the previous slide. I'll go back a page. By a decline in fees and charges for the kinds of activities that the recreation programs and cultural and community services usually collect. Another $0.8 million change is the Community Development Department, which had to spend more money in order to generate the additional revenues that they generated for the general fund. And this is explained in much more detail in the staff report. The big expenditure change in the general fund is in the fire department, which is expected to spend $3.5 million more than was included in the adopted budget last spring. And there are three reasons for this $3.5 million increase. The first is wildland fires. The fire department spent $1.5 million responding to wildland fires in other jurisdictions. And all $1.5 million of that, all of that $1.5 million of extra expenditures either has been or will be reimbursed by the California Office of Emergency Services and FEMA. So no net impact to the general fund for that $1.5 million. But the other $2 million of this does have a general fund impact. There is $0.4 million, about $400,000 of additional station coverage and overtime costs caused by the fire department having to quarantine during COVID-19. And then the remainder, $1.5 million, is due to station coverage and overtime to maintain minimum staffing in the department's operating model. The operating budget assumed in this $20.3 million that there would be over $1 million of vacancy savings for the fire department, and that and while the fire department has generated vacancy savings because there are more than a dozen sworn firefighting positions vacant, it's been offset by increased spending on station coverage and overtime in order to maintain minimum staffing. So this was an overly optimistic assumption. We addressed half of the problem a year ago at this time by putting in $1 million to the current fiscal year budget for station coverage and overtime, but we didn't address all of it. And now we're proposing to address all of it by putting in $1.9 million, which I'll get to in a moment, for the fire department for the current fiscal year. And going forward, we will adjust the base the same way. And then finally, another $800,000 adjustment, projected year-end spending downward from the police department, which has even more vacancies than anticipated in the budget. Where does this leave the general fund? Well, I mentioned at the beginning, the general fund started the fiscal year with a $12.8 million beginning available fund balance, and now revenue is expected to be $152 million. Back to the expenditure page. Total expenditures are estimated to be $143 million, which leaves a difference of $9 million to the good for general fund operating activity during the fiscal year. If you add $9 million operating surplus to a $13 million starting balance, you end up with a $22 million projecting available fund balance at June 30th, 2021. All of it due, going back to the previous page, pretty much all of it due to the $10.75 million of Measure E sales tax that's expected and the $4.0 million of federal CARES Act funding, neither of which were included in the original budget. So back to the revenue table. $21.9 million ending fund balance is 15.3% of total expenditures plus transfers out in the general fund. And that's above your policy target of a 12% ending fund balance. That's the general fund. Moving to the Measure O fund. For the same reasons that sales tax estimates for the general fund are up, the half-cent sales tax or transactions and use tax for the Measure O fund is also expected to be more than $1.5 million higher, 1/8 higher than was assumed in the operating budget. On expenditures, only a slight change to expenditures, down to $22.1 million year-end estimate versus $22.9 million budgeted. So that's a net annual activity or operating deficit of $16.8 million of revenue, minus $22.1 million of expenditures, or $5.3 million operating deficit. You subtract that from the $9.5 million beginning available fund balance, and you get an projected ending available fund balance at June 30th this year of $4 million, about twice as much as was projected back in the spring with the adopted budget. Moving on to the 3 utility enterprise funds. Let's start with water. Slight decline in expected revenues for the water fund, interestingly, fines and forfeitures, which is the category where we put delinquent fees and penalties, is expected to be down almost 3/4 from what was assumed in the budget. And that's, of course, because delinquent fees and penalties have been suspended during the COVID-19 pandemic. Very slight change in base water fees and charges, and most of that is for less than expected purchases of recycled water. So just a $2 million decline in expected revenues, but a much bigger decline, all attributable to capital expenditures, a much bigger decline in total spending by the water fund. The total O&M expense, including capital outlay, was expected to be $65 million. Now it's only going to be about $39 million, which leads to $26 million of a reduction in the current expected expenditures by the water fund, plus another $7 million decline in capital outlay in this area. Put these two together, you're about $34 million less of projected spending, most of which, as I mentioned, is capital. So the Public Works Department expects to request a $30.6 million carryover of CIP to next fiscal year. So here's the arithmetic for fund balance. Beginning available fund balance in the water fund was $52 million. $81.6 million of revenue minus $70.6 million of expenditures is an $11 million positive net annual activity. So you add $11 million to the 52.2, but then you subtract $30.6 million CIP carryover, and the projected ending available fund balance at June 30th of this year is $32.6 million. That's almost half, 46%, of fund balance as a percent of expenditures, and of course your target is 25%. There's a similar story in the other two enterprise funds. We'll move on to wastewater. Not much change in operating revenue for the wastewater fund. Again, a 3/4 decline in expected fines and forfeitures. Like I said, for water, that's the category where delinquent fees and penalties are assessed, but they aren't being assessed during the global pandemic, during the recession. The big change in revenue in the wastewater fund is from a state revolving fund loan. A state revolving fund loan, it can be drawn down only to pay for actual capital expenditures made. And so while at the beginning of the year we thought almost $29 million of capital expenditures might be made that could be paid by the state revolving fund loan, only about 10% of that is now projected to be made, and the rest of the expenditures will be made in a future fiscal year. So big decline there, but also a big decline in spending, which is captured in row 2 here of expenditure types, both O&M operating expense and major capital projects. So while revenue is down $26 million, expenditures are down $39 million because of the delay in completing capital projects. That leaves us with $50 million of expected revenue this fiscal year, $40 million of expenditures, a $10 million net annual activity surplus or positive. But just as with the water fund, Public Works Department intends to carry over a substantial amount of CIP money to next fiscal year. So the arithmetic for the fund balance for the wastewater fund: start the year at a little under $47 million, add a $10 million operating surplus to $57 million, but subtract $36 million of projected CIP carryover to next fiscal year, and you get a projected ending available fund balance of $20 million. Just like with water, that's about, well, in this case, it's exactly 50% of fund balance as a percent of expenditures, or twice the target reserve level of 25%. Environmental Resources Fund, the third and final utility enterprise fund. Very little change in revenue for solid waste purposes. Some decline in operating and maintenance expense, mostly some capital purchases. So only about a 25% reduction in spending compared to the original budget, which leads to a $54 million expected total spending in the current fiscal year versus 63.7 that was assumed back at the start of the fiscal year. Same arithmetic for projected ending fund balance, projecting available fund balance for Environmental Resources Fund. Start of the year, July 1st, 2020 at 34 million. Net annual activity, 51.7 million of revenue minus 54.3 of expenditures is a slight negative annual activity. And then we strip out projected CIP carryover, and we get a projected ending available fund balance of $26.1 million, a little under 50%, almost twice the target reserve level. The request for budget appropriation that's attached to the staff report runs for 8 pages. So I'm not going to go through the dozens and dozens of items there. Noteworthy among them are the annual, balance sheet appropriation changes for the IT fund. Committee member Basuba will remember this from a year ago, and for that matter from 2 years ago, where the IT department has to pay vendors well ahead of time. It's dozens of software vendors well ahead of time for software license and usage charges that won't actually be used until next fiscal year. So we don't affect fund balance in the Information Technology Fund by making this balance sheet appropriation, because we convert cash to prepaid software license and usage charges. But we do need an appropriation from City Council in order to make a payment off the balance sheet. And that request is for a little over $400,000. And the IT department has created a list, which is also attached to the staff report, of the dozens of software and license usage charges that it incurs. The request for budget appropriation also includes a number of adjustments to the special district funds. In fact, that's most of the 8 pages. The biggest one is for Fund 172. That's the Landscape Maintenance District Administration Fund, which itself holds the budgets of a bunch of different landscape maintenance districts. And the request for budget appropriation here would recognize about $0.9 million of revenue that we should have included in the proposed budget last spring, but that got overlooked. So it was an inadvertent omission from the budget document to put the revenue number in for Fund 172 Landscape Maintenance District Administration. The appropriations for expenditures were included in the budget vote. Everybody left out the recognition of the revenue. Most of the other projects are for, most of the other appropriations for the various special districts are for relatively small but special projects like irrigation, repairs, spot repairs, and a variety of minor things that don't warrant a lengthy description here. Some tree maintenance, some replanting projects, things like that are requested there. And then there is a big appropriation request for the Community Development Block Grant Fund of $2.3 million of additional CBG money that the Housing Department has secured, and then a request to spend it on the items listed in the budget appropriation request. Moving from that to the recommendation to amend the position control resolution. So there's a variety of staff recommendations for position control. There's a recommendation to add 1 FTE Executive Assistant 1 to the City Council budget. For the rest of the fiscal year, that would cost $55,000, and then full year costs going forward starting in 21-22. In the Billing and Licensing Department, there's not a budget implication, but the Human Resources Department recommends reclassifying 1 position from Administrative Assistant to Billing and Licensing Supervisor. Inside the Finance Department, my department, there's a recommendation from me and the City Manager to add a 1.0 FTE Confidential Administrative Assistant and a 1.0 FTE Assistant Chief Financial Officer at almost a $60,000 partial year cost, and probably quadruple that for fiscal year 21-22. The reason is the coming wave of additional work for the ERP project. the Tyler Munis software that we're well into implementation of. We're now far enough into the implementation of the Tyler Munis software that we can see that centralized accounts payable, project accounting, the budget module, the purchasing module, there's going to be a whole lot more work on the finance department, both in and of itself for doing reporting and the care and feeding of the ERP system, and also helping, supporting, training, working with the many operating departments who start to use this centralized system too. So we figure might as well get ahead of it while we're in implementation, because we know we're going to be swamped, and let's have 2 new positions to help with that work. So the 1 FTE Assistant Chief Financial Officer would be in addition to, parallel to existing Assistant Chief Financial Officer Donna Ventura. There's a recommendation in the fire department to add 1.0 FTE paramedic to support pandemic response. That's a $31,000 appropriation for the rest of this fiscal year. And in the police department, too numerous to mention on a slide, but detailed in the position control resolution, numerous additions and deletions that allow police department employees to move up to the full journey level from their current level. There's no budget impact from that recommendation. And similarly, the last one for the Water Operations Division of the Public Works Department is just to reclassify a 1.0 FTE Chief Operator to a 1.0 FTE Senior Water Treatment Operator. Next, there's a recommendation to amend the classification and salary schedule resolution. Just 2 things. Increase the annual salary range for the IT director, which is currently under recruitment for market comparability reasons. And finally, to establish an hourly salary range for the new paramedic position I mentioned a moment ago in the position control resolution. And then the last recommendation is that the City Council authorize equipment to be financed by the Bank of America line of credit. Coincidentally, the IT department and the police department both need about $50,000 IT for a security-related construction project that involves an audit finding, and the police department for furniture related to their dispatch console project. That concludes my presentation. Thank you.